questions. One of
Yeah.
them is about banks, companies, and governments, and how we're seeing them get involved. I think it was, I could be wrong. I think it was Chase Bank is starting to get involved, and I mean, there's a lot of things happening, and it's relatively, in the past month, we're seeing them all get involved in DeFi, well, in crypto. What do you feel Drip and Animal Farms their position? Like, what part do you see them play within all these institutions trying to get involved?
Well, so one of the major ways that these big players secure profit is in the form of loans. The reason why they do this is because loans are not taxable events. So as long as the interest that you're paying on a loan is less than the capital that you're able to earn through the loan that you had issued, it always makes sense to take a loan rather than sell the asset, as long as the asset that you're in is a profit generating asset. And crypto and DeFi in general does not have the proper infrastructure to take one of these kinds of loans. And Animal Farm is going to be the first project that allows for this kind of lending model where, and I'm not a tax advisor, I'm not giving tax advice, but based on my interpretation of US law, will allow people to access capital without triggering taxable events. And that's going to be very attractive to these major players and major institutions. And I see that as being something that this is one of the reasons why I was saying it's going to revolutionize the space, because it makes crypto way more attractive to the big players for this reason and for other reasons. Now, I see them entering to DeFi uh, more so than crypto in general. And the reason why I say this is because of the recent news. Now, people like us all know not your keys, not your coins, never trust centralized exchanges. Regulation does not protect users. Education and decentralized, immutable contracts with strong protocols protect users. We understand that. And the institutions and big players are starting to understand that. You can see just a couple weeks ago, or just maybe a week ago, JP Morgan made basically an announcement, an internal announcement to their investors that crypto, uh, uh, basically their quote was that, let me just pull it up. Their quote was that the recent actions that took place that that ended up realizing a loss in crypto had nothing to do with DeFi. And to see someone like a JP Morgan recognize this and and say this publicly really lets you know that there's a education happening where these major institutions are realizing the purpose of crypto and the purpose of DeFi, and that they are not protected by being in these in these major centralized institutions. And if they want to get into DeFi, they should actually get into DeFi. They should actually get into um, decentralized protocols that protect investors and allow them to take custody. Animal Farm is a project that allows people to earn yield without ever giving up custody of their assets. And this is because it's utilizing automated market makers and immutable contracts that are providing services for an end user that pays fees which generate profit. And while I was just talking, I pulled up the quote from JP Morgan, and what they said is all the recent collapses in the crypto ecosystem have been from centralized players and not from decentralized protocols. All right, that's what JP Morgan just said. And they said it last week. So this just goes to show that these big players that had billions and billions of dollars in FTX and in Genesis and Celsius and Three Arrows Capital, um, they recognized that there is a ton of value to be had in crypto, but they were just going about it the wrong way. They were treating it as if it was any other centralized investment vehicle. And they still are going to want to have exposure to the market, but they're going to be looking for solid DeFi platforms. And that's what we're providing. And we're providing better utility and better functionality than any other DeFi crypto project that allows the user to earn yield in a non-custodial way. And that's exactly what they're looking for. They're looking for vehicles to earn yield. And one crazy thing that I haven't really got a chance to speak about is just how poorly these centralized institutions were managed. So Genesis was really one of the main hubs for centralized yield generation. And the way it worked is platforms and companies like Three Arrows Capital, Celsius, BlockFi were having people stake capital on their platform, and then they were lending it to Genesis. And then Genesis was lending it to an investment firm that was under the Genesis arm. And then that investment firm was lending the majority of it to Alameda Research, who were then spending it on Adderall and penthouses. So the the uh the company, I'm trying to think of the name of the company. Anyways, one of the largest players in crypto, instead of lending directly to Alameda Research, right? They were lending to Celsius, Three Arrows Capital, and BlockFi. And then those three companies were charging a percentage just to give it to Genesis. And then Genesis was charging a percentage to give it to Alameda Research. And then Alameda Research was charging a percentage. And as far as I can see, the only reason why they were lending to all of these companies, eating up all of that arbitrage and all of those performance fees, right? They're losing 15, 20% in fees just through arbitrage between all of these different platforms. And the only reason why I see that they were doing this is because they wanted to make it look like they had a diversified portfolio. So if they were lending all of their capital to Alameda Research, investors would say, okay, this doesn't look legit. We're giving you money, and then you're just giving it all to one investment fund, and that's it. And then that investment fund has no oversight and no transparency. So what they did was lend it to Three Arrows Capital, BlockFi, Celsius, Genesis, and Alameda Research. So it looks like they're lending it to 5 different firms, when in reality, all of those firms were just at the end of the day charging a percentage to give it to someone else, who charged a percentage to give it to someone else, who charged a percentage to give it to Alameda Research. And that was it. And it's complete misallocation of user funds. It's complete, either a major misunderstanding of how to diversify and manage risk, which I don't think is the case, because these guys are, multi-billion-dollar fund. They know how to manage risk. So I think it's just a matter of trying to trick investors and using the fact that they're the lack of transparency and the lack of oversight to do it. So it's just as dirty and as corrupt as can be. And this is all coming to light, which is beautiful for us, right? It's a short-term black eye for crypto, but a major long-term win for DeFi, because this is not an issue that has much to do with crypto, right? There are offshore Forex exchanges and offshore stock exchanges that go down every day and steal people's money every day. It just happens that this was a big one, and it was crypto related, but it has very little to do with crypto. It's just crypto were the assets that they held, and they were a big one. But
Centralized.
complete misallocation of user funds. And what we provide with Animal Farm is the solution to this. And it's very clearly the solution. It has all on-chain transactions. It's non-custodial. It's fully decentralized. All of the important values are immutable. The only kind of adjustments that we can do are adjustments that allow us to add additional lending options and kind of evolve with the space. But we have no access to the ability to change variables that would allow us to access user funds or access the liquidity pool or anything like that. So we are what DeFi was built for, and we are the safe alternative to these yield generating platforms. And the major players, I think, have learned a hard lesson. They will not be the ones that pay at the end of the day, right? It will be their investor base that pays and the small guy. But they, you can only operate in that way for so long. And even though they're not the ones that pay at the end of the day, if they want to keep their investor base, they're going to have to make changes. And the investor base still wants access to yield, and they still want access to crypto. And we're the way to do it, in a safe way, in a secure way, in a low risk way, and in the way that DeFi was created for.
Yeah.